This is your standard pro forma. And then what you will normally do is in the first working note, so always follow this particular standard of doing it, so it's like it's going in a flow, and then you won't have to uh, be in doubt or in any sort of confusions, okay? Because in the beginning, what you will do is you will calculate your group structure, what is the group holding or a percentage of shareholding between them, and then after that you would calculate the net assets, and then what are the changes. So this was the net assets at the date of acquisition. So net assets is and the figure of total assets, and then after that your thing as well, right? So it's just the total assets minus your liabilities, right? So this is just the same figure, but we calculated it from equity, okay? So this is your acquisitions date of net assets, and then at reporting date, this is the changes that has happened. So it has increased by 5,000. So that's your post acquisition profit, right? So using this, we will calculate goodwill. So your cost of investment is 60,000, which is not given in the question in the details below, but it is over here in non-current assets as shares in Jones. So this might be tricky sometimes. We might not. So when looking at this particular question, you might think that it's only 16,000, and then you might get a negative goodwill, whereas the amount is situated over here. Okay, so don't be confused in that. And then after that, once you've calculated your goodwill, so there is two methods of calculating goodwill: fair value method and net proportion method. So since in this particular question we are only using fair value method, so this is how you calculate your goodwill using fair value method, which is cost of investment, then you add the fair value of non-controlling interest. This will give you the total value of, or the present value of the total company, okay? And then this is how much is the present value, and then what's the net assets of the company. So what are its actual assets that the company holds is this particular figure, okay? So this will give you the goodwill, okay? So this is how much extra you paid for that particular company, okay? So in net proportion method, what you would do is in fair value of non-controlling interest is calculated as per its percentage of net assets, whereas in case of fair value, the fair value is already given. Normally it is given. So this is how you calculate goodwill. And then in fair value method, the goodwill calculated is total goodwill, whereas in case of net proportion method, the goodwill calculated is only the goodwill of parent, okay? So working note 5 would be, you would calculate the non-controlling interest. So fair value of non-controlling interest is 12,500, and then the post share of post acquisition profit is 1,000. So this is after the company has acquired, there has been a profit of change. As you can see, if you subtract this minus this, so you would get 5,000, right? So out of 5,000, so there will be two different parts, right? It will be split into two between the parent and the group, right? So see, in this particular question, what we have done is this 5,000 minus 55,000 minus 50,000 into, this is the percentage, so which is 20%. So this is their interest. So they have their particular interest, fair value, their non-controlling interest in terms of shares as well, and then they have an interest in profit as well, right? So this is your total NCI, okay? And then in this case, in working note 5, you would calculate group reserve. So in the case of parents, the retained earning is not to be shared with anybody, so we can use 100%, whereas in case of the subsidiary that we've just acquired, is that we receive the profits out of it. So there has been a profit of post acquisition profit of 5,000. Among the 5,000, 1,000 is given to NCI, which is 20%, and then 80% is our, which is 4,000. So our total goodwill reserve is 4,000, okay? So this will give us 74,000. And then based on this workings, what we will do is that since we don't have any impairments or anything, so we don't have to worry about it. It's just a basic simple question, so we will definitely look at that as well later on. So when you're preparing your SOFP, what we will do is just enter the data. So goodwill we have already calculated, just bringing that figure from up to down, and then PP is already there. We add the PP of Jones and Dickens, both of them. So 85 plus 18, and then current assets is same thing. You add up both companies, so you will get your total assets after that. Just adding all these three up. So don't forget the goodwill. Write the goodwill in the first, otherwise you might forget it. Okay. So in case of equity, because since when you're looking at this particular SOFP, you don't see goodwill over here, so you normally don't tend to think there is a goodwill, right? So don't forget that. And then in equity, so you always take the capital of the parent only. Okay. And then share premium as well, parent only, because the other entity you have already acquired and you have already calculated based upon it the holdings, right? So that is already included in your NCI, that is already included in everything else. Okay. So you have already accounted for that already. Okay. So whatever you have touched earlier on in your workings, you don't have to touch it right now when you're preparing your SOFP. Okay. So NCI, so your retained earnings is your figure that you have calculated from working note 5, say 74,000. That's your figure over here. NCI is working note 4, and then capital current liabilities is your Dickens and Jones. You add it up together. So this is how you get your total equity and liability. Okay, so see, this figure should match this figure, as you know that already. So this is how you basically solve this kind of problem. So just don't get confused in goodwill, capital, and then after that capital, so you only use the capital of the parent, and then after that in case of NCI, don't forget to put NCI as well, since you're looking at this particular question, so you don't see NCI over here, so you tend to miss it out. Okay, so don't forget that. And then always remember which method of goodwill calculation you are using. Okay, so it's not only the format that you need to remember, it's that what figure is going where and what are the principles behind it. That's more important. So when you understand that thing more properly, it'll be very easier for you. So that's it pretty much for today, guys. If you have any other questions, please do comment down below. I'll definitely answer it for you. Until next time, bye bye.